Ryanair beat expectations for its latest earnings report, but Europe's largest low-cost carrier cut its passenger traffic goals for the year, blaming Boeing's 737 production delays. It's not stopping the stock this morning. It is up by about 2.5%. And joining us right now is Ryanair CFO Neil Sorahan. Neil, first of all, let's talk about what happened for the year. You guys had better than expected numbers, and I think a big part of that were people who were booking over the Christmas holidays.
Yeah, the quarter ended up strongly, as you said, 149 million profit, up from 15 million last year. Traffic strong, up 9% to 45 million in the quarter. And fares a bit better than we'd indicated back with the half-year numbers in November, where we thought fares would be modestly down. They finished marginally up 1% per passenger. Costs continue to perform very strongly within the group, so about a 1% per passenger reduction in costs over the course of the quarter as well. And then, it would be wrong not to highlight that there was an easy comp in that last year the online travel agents took Ryanair off sale in November, December 2023. That's pretty much in the rearview mirror now, and I think we saw the benefits of that coming through in the quarter.
You are warning that your passenger numbers aren't going to be quite as robust as you had been thinking before, but that's because you're not going to be getting as many planes from Boeing as you anticipated. Walk us through what you're now seeing and how many planes you expect to get delivered.
Yeah, we had 172 of what we call the game changers, the MAX 8200s at the end of December. I think we'll get another 9 of those, so we'll have 181 of those aircraft in our fleet for the peak summer period. We'd anticipated that we would have had about 25 of them into the summer, so well behind. The ramp up after the strike has been a bit slower than we would have hoped for. But that said, myself and Michael O'Leary were in Seattle a couple of weeks ago. I'm definitely seeing improvements on the ground, having been there last September and this time last year. The quality of fuselages coming out of Spirit and Wichita is much improved. Disappointing that we'll be behind on the traffic this year. We're only growing to 206 million passengers instead of the planned 210 million. But I'd have a high degree of confidence that we'll get those 9 additional aircraft before the summer. And then that leaves 29 aircraft in our current 210 order book with Boeing for MAX 8200s. And again, I'd be disappointed if we don't have all of those ahead of the summer of next year, which will enable us then to ramp up traffic to another 215 million. So we'll catch up on the opportunities, albeit a year later than we'd hope to do so.
The street, again, doesn't seem too surprised. I think everybody knew that you weren't going to be getting all these planes. So the stock this morning's up by about 2.5%. For the 1 year, though, it's down by about 9%. Is that because the recognition of these planes not coming in has kind of gradually developed over that time? Or do you think this has more to do with the back and forth skirmish you had with the travel agents? Why do you think the stock's off 9% for the year?
For the year, well, I mean, a lot of it's down to the pricing in the first half of the year, where we had higher for longer interest rates in Europe, which meant we had to stimulate fares more than we would have anticipated. It also took longer than people would have expected to integrate all of the online travel agents. That's fully done now. So I think having seen fares down 15% in Q1, down 7% in Q2, we've turned the corner in the current quarter, or the quarter just ended, where fares were up 1%. Easter will be a drag into Q4, but we're now guiding full year profits in a range of 1.55 billion euro to 1.61 billion, behind last year, but still our second best year ever. Q1 into next year looks like it'll be relatively strong, just because we've got a full Easter in there, and thereafter, a little bit difficult to get, based on limited visibility, difficult to give an idea of where fares may go from there.
Hey, Neil, there are so many people in so many industries that are waiting and watching Boeing, hoping that the turnaround there is really taking place. You got a chance to be on the floor, as you mentioned. What did you see? Great that you think there is a real turnaround that's happening there, but what did you see, and what can you see in a quick visit there that makes you feel like things are really in a much better place?
Well, what was very different when I was there, for example, in September, or indeed this time last year, I saw a full factory. nose to tail aircraft on the production line. Very important. I saw an enthused workforce, although they have got a big pay increase, so that has to help. But I did see a workforce who are very keen to get things done. And more importantly, I saw fuselages, which are in much better shape than they were. I think Spirit used the strike to address a number of the quality issues that they had. The quality of the fuselages coming through is definitely much better than it was. That leads to a faster build time in Seattle. And then importantly, I didn't see as many wings and engines and everything else out on the ramp as I'd seen last time. Now they're being actually hung on aircraft, which is important.